welcome back, YouTube. So here with another Dogecoin update, we're going to be talking about where Doge is holding the line at. We have been successful in grabbing liquidity at some of those major zones we talked about in the last video. And I'm talking about right here at around the 19 cents. If we were talking about this gap zone where if we didn't hold it, we would fill down here to around the 17 cents level. And you can see here that we have really held the line here and grabbed some liquidity here back on the 28th. That's this long wick that you see here, and we ended up closing above the 19 cents mark. We're pretty much where we are now, right around 20 cents. So kind of like a flat, low volume day. But overall, we're able to grab some liquidity from down there and close above it, because closing below that range there puts us in another gap zone. These gaps here, they typically all filled, and this is what I meant by when you trade gap zones, and when you jump into there, you're going to see bigger moves in either direction. So you can see how it was a lot slower here when we were battling around the 34 cent mark, 34 cents, and then we had smaller candles. But as soon as we got in this gap zone here from, for those of you who chart along, I'm talking about November 10th and 11th, you can see here like February 2nd, what is this, February 3rd, you can see that we're getting more volatility here for this gap zone. And we are getting ready to, below the 19 cents level, we had pretty much another one here where we had some bigger candles here to the upside back on the 7th and the 5th, right? The 5th and the 6th, excuse me. Thus far, we've been able to grab some liquidity and hold there. And overall, as far as for like the macro terms, what we're waiting on, that has not changed. We need some confirmation here at the macro level to provide some stability for the market. We have to provide like a roadmap as far as for what the things are going to be as far as like on the macro level. You know, are there going to be tariffs? Are there not going to be tariffs? What percentage they're going to be? Like there has to be. They're just, once those things can stabilize, then we'll see some concrete decision making on the market. But as we all know, for those of us who've been in the markets for a while, if it is alluding to uncertainty or something is not set in stone, typically that's going to translate in the market as fear. And when it translates as fear, the market goes down. All right, people they're going to hold cash and not put into there. They're going to look for lows to kind of come in. Bitcoin here is doing what we thought. Typically, like I said, around the 200-day moving average, Bitcoin becomes a no-brainer, and it did exactly that. We were able to grab some liquidity below the 200-day moving average. Normally, unless something catastrophic happens, it'll settle typically around the 200-day moving average, right? And bounce from there. It may not necessarily run back up to like 100,000, but typically the buy orders and buying at Bitcoin at around, because Bitcoin has a lot of higher capital investors in it. So typically speaking, this is why it was so easy to kind of call this here the other day. Around the 200-day moving average, outside of something catastrophic or a major shift in the market, like a crypto winter or something, which I don't believe we're in, but it typically does not stay below the 200-day moving average. So normally this is a great liquidity pool for catching bounces off of Bitcoin here. So what we can potentially see here is like a flattening. We got the death cross here between the 14 and 72 back on February 11th, and retested the 72 here on the 21st. Obviously that got rejected, and we closed below the 14 again. So we got another confirmation. Then obviously we've been bleeding out in Bitcoin ever since. But normally, like I said, outside of something catastrophic, we can kind of expect kind of either to fill this to maybe to around 88,000, but typically, unless we get some of those macro confirmations here, what's happening with as far as with the tariffs, CPI, all those kind of things aligning, we typically see like these smaller bounces and hover around that 200-day until we get some certainty in the market. So let's take a look here. Overall, I'm going to scoot over to coin market cap. You guys should be able to see it. Sorry, I have a ton of tabs open on my computer and I need to close them. So CoinMarketCap, we are up 0.65% day over day, 2.81 trillion total. Fear, obviously, we're definitely in the fear category here. Almost getting ready. It looks like we're getting ready to move into like the moderate, but definitely still in the fear section. Bitcoin 7-day, 1 hour down. Ethereum down across the board, 1 hour 24 and 7-day. XRP, it's up today in the 24 hours, down 16% on the 7-day. Solana 0.19% up today, 4.4% down 24 hours and down 18% in the last 7 days. Doge up 0.90% on the 24, down 0.22 on the 1 hour, and down 17.5% on the 7-day. Overall, and this is, because even when I was sick over the last couple of weeks, this is one of the things when I was catching up, even like on the comments and stuff, they were like, oh, Doge is dead. It was back to 6 cents. So is Bitcoin going back to 20? I mean, so here's my thing, right? Obviously, altcoins historically have a different pattern from Bitcoin. Bitcoin typically runs first. It runs harder. It'll run longer. I get it as far as for capital allocation, but this is one of the things that we've been talking about here on the channel. And I'm going to do an update video because the last time I talked about it in depth was literally a year ago. And I alluded to this in my video I made a couple of days ago, which was, I believe that there was going to be a change of cycles coming on because of institutional involvement, crypto being more mainstream. It's transitioning from, I don't want to say it's transitioning from decentralized, but initially when we're talking about the 2016 run, the 2020 run, it was, yay, decentralization, fighting back, putting the power of money back into the people's hands. And now that we have a lot of this institutional involvement, it's like, no, screw all that. We want institutions and, moon my coin and, create these ETFs, as long as I get rich, whatever. And that's the tone of that will be on the flip side of that is going to be, well, if institutions are involved and they're going to be responsible for most of the movements now and necessarily own most of the major coins, then we're not going to see those 4-year cycles like we used to. Like if JP Morgan, Citadel, Robinhood, all these large multi-billion-dollar organizations are going to come in, they're not going to sit on assets and say, yeah, I'm going to buy this asset and it's going to sit down negative 90% for 3.5 years. No, we're going to have a cycle change here. If they're putting these assets into portfolios, they're not going to have billions of dollars being cut down by 90% for 4 years. We're going to see much shorter cycles and we're going to see less aggressive sell-offs. This is what I mean by we're going to have a different pattern going forward. This is why I don't believe we're at the end of the run for this year or in a crypto winter or that the run is over. I believe that we're seeing that transition that we talked about in cycles. So just kind of keep that in mind before we start calling things prematurely, because I believe that's what's going on right now. I think a lot of calls are being made prematurely instead of looking at some of the bigger picture here. Overall, I believe that we're waiting on some of those macro events again. Like I think we need some stability here with, are we going to have tariffs on who, how much, when? And I think once we get some of those things stabilized, we'll have some certainty in the market, and that's going to put some confidence back in the market. And then we'll be able to, appreciate and go and retest some of those higher levels. But until then, it's uncertainty, it's a question mark, and that always translates as fear. So we can expect there to be these liquidity grabs and possibly even a flattening, which I think will be the best case scenario versus the constant panic here. Obviously, we'll reach an equilibrium at some point, but more than likely we'll see a flattening, hopefully where we are now, because these the levels we're at now, again, Bitcoin 200-day moving average, Doge between like that 17 and 19 cents range. It's plenty of evidence there that these are ranges that we can technically flatten. I don't necessarily believe that we're going back to 6 cents right now, but I think that inside this range, as far as for liquidity coming into the market, confidence overall coming into the market, and then the people who are looking at some of the macro events that I just discussed in this video, they're going to be more likely to buy at these ranges, or Bitcoin at the 200-day moving average versus 107,000. So I think there's plenty of room to add stabilization where we're at now. But overall, this is something we're going to have to monitor day by day. Obviously, as those macros come in and as these things get more concrete, this is something that we're going to have to monitor ongoing until we get that certainty in the market. So anyway, that is my Doge update. Let me know what you think in the comment section, whether or not we're going to go lower or if we're going to stabilize here. I think that'll be a good discussion point. As always, share the video, like, subscribe if you have not, and I will see you guys in the next one.